Well, happy Tuesday, everyone. It's Greg Dixon here from Shared Visions Unlimited Publishing. And today I'm going to talk about a topic related to trend trading for financial freedom. And the topic today is how weekly trends can inform short term trading decisions. So, my philosophy in my program here is to buy things as they're trending up, sell things as they're going sideways or trending down, and try not to get caught either way. So, this week, with the election, there was a tremendous bump in the market. And whether you're elated or devastated by the election results, either way, it was an interesting day for trading, somewhat in stocks, but especially in cryptocurrencies, things like Bitcoin and some of the altcoins. And I'm going to just show you some things here. So here I launched this post today, and I have some charts here. So this is an altcoin, Yearn.finance. I don't follow this or trade it, but this graph here is very dramatic. So for people who have been following this, they probably have been having things in here. It's been enjoying some steady growth, and then on election day, it just went this incredible run up here, and then it started turning back. So just to give you a perspective, these are in Canadian dollars. I trade in Netcoins, and it's a Canadian platform, and it basically started at about $7,500 and went up to $11,000. That's like a 46% jump. And for people who maybe anticipated such a jump and got in with a lot of money at the beginning here and sold out at the top, um, uh, made a lot of money. It's also possible that some people got in here halfway up the run, put in some money, got up here, and then didn't catch it long enough, and at the end didn't really make much money or lost money. So uh, that's that's part of the game here. So part of this, I'm trying to learn how to recognize these signs and uh, trade the trends properly each time. So that was a interesting thing. So what I'm talking about is a long-term trend. This is kind of a bit of an unusual spike, but that wasn't what happened for most of the ones. Bitcoin was a bit more steady. Bitcoin had a bit of a dip. Most of the coins had a bit of a dip leading up into the week leading up to the election and dropped down. So, if you were holding them, you might have seen a bit of a dip in your portfolio, but then it just kind of took off in a steady way. That's a pretty steady gain. So that really what that says is any time in this last that week, if you've been putting money in, you would have very little risk of a drop and a pretty good chance that it's going to grow over time. So the strategy with it when any time you have a trend like this in the long term is just keep an eye on it, keep putting money in it, and you can't go too far wrong. So, but that's not what everything did. This app is probably um, more typical of things. It you know it, there has been a rise of things, and then it's been kind of going sideways for a long time. I traded, and I made a fair amount of money going up at this part here, and then I've been just sort of watching it, and I think the thing is when the point I'm going to make here is if you have something that has done really well for a while, and then now it's just kind of going sideways and not doing anything, like you can hang on to this, you can hang on to it, and you probably won't lose anything. It's not likely to do a massive drop, but it could. But even then, your money is probably better off taken out of something like Avcoin and putting it into something like Bitcoin that's going up. That's basically a more reliable thing, pretty consistent gains. So so the strategy here is to try to kind of what I do is I'm checking the market about once an hour, and I'm buying and selling incrementally. So buy when trending up, sell when trending sideways or dropping. move your money to better performance in small increments. I just have to say it's easier said than done. Sometimes you look here, you don't. This sideways trend is really only super apparent in the rearview mirror. Um, During the time you keep on wondering that there's a tendency to want it to go up, and sometimes it looks like, oh, though maybe it's going to go, maybe it's not. But over a week trend, even a 24-hour trend can give you a better idea of where it's going. And if it's going sideways or going down, if you're still putting money in, it's mostly because you're suffering from the optimism bias. You want it to go up, so you have to ask yourself, are you putting money in because you think it's going to go up or you want it to go up? And again, if it's good, if things are going up with this upward trend here, then you're all good to go. And going back to Bitcoin here, unless it starts rolling off, you're all right to put money in. But I'm just gonna put in a caution here. I think at some point, all the cryptos, including Bitcoin, are probably going to do something like this. They're going to go either sideways for a while or maybe start to decline. So I would not necessarily. You can leave your money in there and be optimistic, but don't be surprised if it rolls back at some point once the honeymoon stage is over. So yeah, so that's it. Those are the trends. The main message here is if you've got a short term 24-hour trend and a 7-day trend that all look kind of like this, then you'll keep pouring money in until until it looks like it's turning. And then I would say don't be too hesitant to take your money out and look for other opportunities when it starts going sideways like that. So I have a trend trading book and program. If you go to this website, you can go take a look at what that is. It's not expensive, and it has some fun stuff in it. Anyway, let's go back up here. So yeah, again, the main thing was how weekly trends can inform short-term trading decisions. Um, it's kind of fun. I do this because I enjoy doing it. I hope to master my approach. I think it's right. The main thing is it's hard to follow my own advice due to the optimism bias. You find yourself wanting it to continue to trend up even after the trends in the graphs are showing that it's either going sideways or even going down. It's a hard thing to get over. So I'm trying to get disciplined, and I'm starting to get a rhythm here where I'm buying things as they're going up, and then as things are kind of going sideways, I will take some of that money out and wait for another opportunity. And there may be times when everything's going down. That's happened. You probably can remember a time when everything was going down, and you're not going to make any money on anything. So that's the time to take all that out, be sitting on cash. And then when you have a moment like that big spike, if you can dump in your cash, anticipate, well, even just see it early. You don't have to anticipate it, but if you see it happening early, be prepared to put some money in and ride it up. Um, on election day, there are many things that went up anywhere from 10, 20, 30% up to that one I showed you that was 40%. So if you had money riding on that, could have made a really decent profit for the day. And so this whole thing is to keep on top of things. Don't be snoozing at the wheel, and be prepared to pounce on opportunities when they come. I think many people did anticipate what that was going to happen on election day and made out like bandits. Um, and there'd be some other events that may actually trigger some predictable things, but for the most part, the market is pretty fickle. It's based on perception and speculation, and you just have to make sure get on the right side of that. What I'm saying is you can get an indication of that speculation by the weekly and 24-hour and hourly trends, and even it doesn't hurt to look at a month trend too to see where things are going. So that's all I got to say, and have fun with your trading, and we'll talk to you later. Bye.